Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 followed by the Nasdaq100 and the Dow Jones30 futures chart. Just quickly before I start today's video, I just want to inform you all that tomorrow I'm going to be travelling. I'm taking my annual holiday for the next 2 weeks. I am still going to be posting videos where and when I can, just depending on obviously Wi-Fi and how much free time I get. But tomorrow I am going to be flying, so there will be no video tomorrow, but videos should continue as per usual as of Wednesday. But let's just get started here with the S&P 500. The market has done exactly what I anticipated it to do. So, we're currently trading within this five-wave structure. Last Friday, Thursday to Friday, we had that nice bounce from that 4,235 area. We bounced all the way up just shy of the August 18th lows. We didn't break above there, and that from that area we have actually in fact been rejected. So what do I believe will happen here in the S&P 500 over the next couple of days is that we'll probably go and undercut the lows that we formed last week and trade down towards 4,225 to 4,200. Now that is an area where you need to take advantage of. Okay, this is the move that I've been looking for the past couple of weeks now. This is an area where I will be investing a significant amount of money going into Q4. Historically speaking, Q4 after a year when you're up the amount that we were this half, typically speaking, Q4 does tend to outperform by 4% on average. So that would take us, from where we started today, all the way up to roughly 4,500-ish. So this would offer a fantastic risk-reward ratio if you enter between 4,225 to 4,400. Reason being as to why I believe that we are still going to see some more deterioration here is not just because we're trading within this five-wave structure, but if we just quickly jump over to the 10-year bond yield, we have actually broken above, I think it was last Thursday's highs, and that is a very bearish sign. That means that yields haven't peaked as of yet. So we could easily see this continue higher during tomorrow's session, maybe even the session after, and that of course will cause some more downwards pressure here in the stock market. But the good news is that with the DeMark exhaustion appearing on the weekly and the daily charts for not just the yields but also the dollar, that does indicate to me that we are in the process of forming a bottom here, and that the low is very close. And just quickly moving over to the Nasdaq100, structurally talking, the Nasdaq100 does look a lot more better, a lot more safer than the S&P 500. We've managed to hold this uptrend and we haven't undercut the lows. So I don't know whether that's something that still has to happen here. Technically speaking, the Elliott wave structure doesn't have to take place, but over in the S&P 500 it does look like it is playing out. But the Nasdaq 100 from a structural perspective, it does look a lot more intact. So I think that if we were to dip below 14,438, which is the lows that we saw last week, that would be a gift, and I would be a buyer there with a 200-day EMA not far below. And I think that going into Q4, the end of Q4, the end of 2023 even, I think it does offer some fantastic risk reward, a very nice setup going into the year end. And then finally, just moving over to the Dow Jones 30, you could argue that we have found some area where we could potentially find support here. 33,284, this market has been hammered as of recent. This is a minor uptrend line that I've drawn, which takes out the lows that we formed back at the beginning or mid-March. And this is an area where I would be looking for buyers to step back in. If we just draw this trend extension, we can see that we've kind of broken below this full extension, and the next stop lower would be 32,335. Now the good news is that I don't believe that we are going to go that low. There's also support here by the 0.5 fib area, which sits around 32,800. So this is an area where I am looking for a bounce. What's very important here is that we regain 34,000. 34,000 is just above the 200-day SMA and EMA. If we can do that, then that would be very encouraging indeed. One thing that you should know is that we are now trading in oversold territory here for the Dow Jones 30, so hopefully we will see some buyers step back in and pick up this on the cheap, especially as we move into Q4. But that's going to wrap it up for today's video. Don't forget, tomorrow there will be no video as I am traveling, but videos will return as of Wednesday onwards. Don't forget, guys, if you would like to join my Signal team, I will be updating my Signal team despite the fact that I am traveling tomorrow, because I should have Wi-Fi on board the plane, and I will be keeping a very close monitor on the markets throughout my flight. But make sure you scan this QR code on your screen. It will take you to my website where you can sign up. It takes 10 seconds to sign up. It's completely free of charge to join, and you get 1 month completely free of charge. And if you don't enjoy the service, then you can cancel at any time and you will not be charged. To join, all you have to do is scan that QR code. That will also give you access to my daily market research that I post on the same group prior to the US markets opening to help you guys at home navigate through these volatile markets. But thank you very much for watching today's video, and I will see you all on Wednesday. And if you join my Signal group, I'll see you tomorrow.